Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get cut. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It's Wednesday now, isn't it? Wow. This week is going to be fast, but we got a little bit of a reversal going on in the markets at the moment. Let's come over and kind of take inventory of where we're at. So treasuries took quite a dive yesterday. They didn't go very much further after our session. Kind of sucks that I didn't take advantage of any of that, but you know what? That move did kind of well, I'm not going to say it came out of nowhere, but the timing of it was certainly strange. Oh man, you know what? The sources have switched around again. Hold on. There we go. There we go. And but here this morning they're actually retracing a lot of that. I mean, it's only been recently now over the last 30 minutes or so, but we are getting a strong bull move. And remember that we do have a Bank of Canada interest rate decision today. S&P 500 also getting hammered yesterday on that open, although for the most part on the day it just kind of ranged after that. In the overnight they're trying to pull something out, but then heading down. Oil continues to struggle. So even after OPEC like cut and everything, and everybody's saying, there's not enough oil supply, etc., but it continues to struggle. Natural gas, at least U.S. natural gas, also struggling, which is I don't know why. Concerns over global growth, I guess. Here we got gold and silver. Well, silver's made somewhat of a recovery. I mean, that's encouraging. And they're kind of following the rest of the metals. Here, copper looking okay. But the real story continues to be the dollar. Man, dollar above 110, almost to 111 here today. And Bitcoin finally taking the smackdown yesterday. They're not to new lows. They're not to new yearly lows yet. They're awfully close, though, aren't they? They're awfully close. So we'll see where they go. And this timing of this is all really, really weird because the Ethereum merge is just around the corner next week, I think. So to see another big decline in Bitcoin, that would be interesting, wouldn't it? So that's where we're at. We're coming in here. We do get some trade balance numbers in about a minute. I mean, I'm not going to say that those are insignificant numbers, but you usually don't see sustained moves in the treasuries off of those. Also, at the top of the hour, we're going to have Fed's Barkin speaking. Then at 10 o'clock Eastern time, we'll have the Bank of Canada rate decision, and Fed's Mester will be speaking. Then later in the day after we're gone, we'll also have Brainerd and Barr and the Beige Book. So we're going to have some speakers. Now, last time around when we had a bunch of speakers like this, it was like, oh, they're going to come out and they're going to be super hawkish and yada, yada, yada. Well, the state of the market is very, very different now. I'm not 100% sure what they'll say. We did have a Fed speaker last night saying, well, we need to get real interest rates up, right? Hold on a second. I'm sure none of you were watching the camera there, but I just had like a cough and sneezing fit trying to get this stuff out of the back of my throat. It's always clear stuff these days. I think I'm on the mend. Oh man, last night I slept like a rock. I mean, I got to bed a little bit earlier, which also means that sometimes I'll wake up a little bit earlier, but it was a good night's rest. It was a good night's rest. And I had a workout yesterday. It was okay. So I think I'm getting better. You know what though? I also like I gave myself a paper cut underneath of my fingernail and my whole hand. So I hope that that's not getting infected. My whole hand is, I can feel the inflammation. Okay. So now that I've thoroughly disgusted you, we did get the numbers. What were the trade balance numbers? Negative 70.7 versus negative 70.2 for U.S. international trade. Treasuries still chilling up here at the highs. Looks like there is I don't know if this is so much a liquidity hole. Well, I didn't really watch it play out, so I don't think I can say this for certain, but it doesn't look to me like this is like a liquidity hole, a very strong one, nor is it like resistance, like people really leaning against this price level where that's kind of like the overnight high. It just kind of looks like they just are shying away from it at the moment. I'm not 100% sure though why we're seeing the strong move up. When I look at it on the charts and then like we were doing, taking inventory of things, it kind of looks like a news-based move, but I'm not seeing the news. Not yet. UN Education Agency launches war on conspiracy theories. Okay. Stocks and bonds dip as the Wall Street Journal Fed Whisper hints at a 75 basis point hike in September. Oh, now that's interesting. Okay, given the timing of that story, that must be what was moving the interest rate market. But interestingly enough, when that happened, we did see interest rates increase, and then it's been rallying ever since. So that is incredibly interesting. So, but why did I not see him saying anything? Let's get some water in us. That might help us clear things out a little bit. So when I come back here on the Twitter. Okay. Nick Timiraos, Fed Chair Jay Powell's public pledge to reduce inflation, even if it increases unemployment, appears to have put the central bank on a path to raise interest rates by 75 percentage points rather than 50 points this month. A little better. Getting a little better here. Okay, and Joseph Wang was retweeting it as well. So interesting. Let's post that in Discord. I'm kind of wondering if this is not a good reason to go short the treasuries. but I don't know what the cause of the buying is. I do see that despite this rise here, that the volume has been sell. So it's all a little strange to me how this is moving. Iceberg at 24 uptick. Did see a spike in the dollar when that happened as well. And this one is kind of an interesting situation because I think that we have an opportunity to take a little bit of a risk. Seems a little uncertain, right? So this move up may have absolutely nothing to do with what the fundamentals today are. In fact, I think the way this is going, there's probably a really good chance that that's the case. What's this? Question of the day. A Great British Pound is currently trading 115. Talk on the street is for parity to trade over the next 12 months. How would you execute this trade given market pricing is already bearish? What strategy can you deploy to take advantage of this move? Trader Brand, I always joke about this, but crypto is the best proxy for risk. Yes, so don't. So you go short crypto. Interesting question brings an interesting quote to mind. Stay in your line. As a day trader, I have to know where I can optimally apply myself. Yes, I think Great British Pound is going lower, but I don't have an edge playing a long-term swing trade. In fact, if I were to put on a long-term short, it would probably cause more problems for me, given it runs against my typical style of trading. Another quote that comes to mind is that Raoul Paul said sometimes it's best to invest in big picture fundamentals to 100% sure you have fixed exposure to it. So, for example, using Great British Pound as an example, if I want to be short this market, the best trade I can place is to make sure I own 0 UK assets denominated to the Great British Pound. Yeah. Okay. I see where you're going with this, Trader Brand. Cause that's kind of what I'm thinking right now. Although I'm not thinking so much the Great British Pound as I am the euro. It's basically I want all of my assets to be in the United States. But the reality is there anywhere to run? Like, so all year, people have been giving us this S&P 500 target of 3,400. Now we shied away from that. I don't know if that means that a lot of those analysts backed away from that number, but yesterday I started to see more analysts bring that number back, 3,400. So maybe we're on the way to 3,400 and maybe lower. If that happens, is there anywhere to run? There's like, because at the moment, the market is, or the information that we're getting is telling us that there's going to be 75 basis point hike in September. And so interest rates may continue to be high, so you can't do the flight to safety trade over there. At the same time, excuse me, I'm still trying to clear myself out here. The other thing is that it seems like the big trade right now is long the dollar, right? At what point does that fall apart? You know? Like it's on such a strong tear. At what point does long the dollar collapse? Is there something that might happen that could cause that? Hmm. So there was a little bit of an iceberg there at 24, and there's a large order at 23 half. I'm not seeing, well, kind of watching these guys down here in the micros to see if they decide to do anything about it. Doesn't look like they're going to. Doesn't look like they want to offer 33. Hmm. They're shying away from hitting the 23 half. This one at 24, maybe a bit of a liquidity hole there, but it's pretty dull. And maybe it may be bouncing here. Caught me. Mm, Not much being offered either side. 24 pulls easily. The volume hits and it all disappears. The liquidity is acting a little skittish here. Like, look, they didn't trade down through 24, but it was only like 16 traded and they all pulled, but then they weren't able to get the 100 or so that would be required for it to tick down. That's a little odd. I'm detecting a hint of flattening going on here. So if we do move lower, it may be driven by the 5-year, which would kind of be in line with yeah, the 75 basis point hike is coming. Thing is, we had that move back up, and you kind of have to wonder, okay, is there somebody buying the market or anything? But I don't see any evidence of that in the volume. And then you come and you look at how it's trading here, it's kind of dull. So this is a very curious situation. Although, if we are to get the trade that I'm looking for, it being very dull at the moment is probably what we'd expect, and then probably a little bit of uh, a break, and then maybe we might start to see some volume. Do you trade with your own money? Yes, that's just my own account. It's a teeny tiny account. I like to keep it small. I've done some of my most popular videos have been about funded trading companies, actually. So, but I'm not a huge fan of them now. I mean, I went through all of that, but I don't really think that with micros that they really make sense anymore, unless you're like really crazy good. But even then, the way that their systems work and everything, it looks like it's really is just a good way to put on a lot of excessive risk. Joseph Wang. Okay, so here's an answer to maybe our question earlier. Are you listening, Joseph? Because if you're listening, Joseph, we got to get you on. Got to get a interview with you. Milkman's point is that there is a ton of US dollars held by people who are not friends with the US, and sooner or later they will have to diversify away. That could be very USD bearish. Okay, so it looks like they did finally take 24 offer. It took about 900 lots to do it. There was a hit at 23.5 and the big order pulled down tick. 900 there as well. But so this so far is in line with what I was anticipating, because the sell volume is in fact there. And once they once the 5-year started getting moving, the market orders were easily able to overcome the lots that were standing in line there. Now that 900 at 24 and 23.5, probably just the market makers that kind of got stuck on the edge, right? Now that it's 604 to trade 23. So let's reset. Now we get to find out if this has legs. ConocoPhillips CEO, EU profit tax would deter energy supply. Yeah. I don't know what it was with me last night. Maybe I was just tired. The food hadn't gotten to my bloodstream yet. But the I was just sitting here, I was like, man, it seems like my whole life I see governments do the wrong thing over and over again as it pertains to markets. It's like, oh, we have an energy crisis. What should we do? I know, let's tax the energy companies to make it harder for them to produce more energy. I don't get it. How can these people be so stupid? And like the thing is that you'd think that they would say, oh yeah, we screwed up here. We put ourselves in this situation. We screwed up. Maybe we should like take a different approach. But no, it's like, well, we can manipulate this market. We just buy all of the things, and very frustrating. I'm very concerned for Europe this winter. Vibe, good morning. I'm a little concerned for Europe this winter. I'm a little concerned for you know for the US. Like California. Oh my gosh, I was seeing these posts from people. They were intentionally using as much electricity as they could. Like they wanted the California power grid to get busted. It's like, okay. Okay. Hmm. So what I'm seeing here is that while the volume was there to take them below 23, 22 half, we did not, at least for the moment, see a continuation of that. Now, if there's like some block traders out there, they might be kind of chilling. I have to say, if I was a block trader and I was looking to sell today, I think I'd be pretty happy with how it's um, proceeded so far, because we had that really ugly move to the downside and then completely retraced and went back up to highs. And so now you can sell back into that, right? But you want to be careful. You don't want to be doing it too much or too hard, because that liquidity is going to be a little bit soft. And I think that we saw that 22 half 22. Although I do think it's been over an hour. So that liquidity should be healed. So I think that the black sellers have the opportunity here to start doing it. But it's just they're kind of getting stuff in this range. So they might as well, get what they can here while it's still behaving like this. So I think that we're still kind of in line with our scenario. It's just that we're not really getting strong. Um, what is the word? The word confirmations that it's going to come. Not yet. Looks like sell all pullback day. I don't know. So just to review where we're at, Octavius, where I'm at least. I get what you're saying. Well, I think what you're saying is that today might be kind of a little bit of a mean reversion day, because we've had a lot of big down days in the treasuries lately, right? So what happened was the Fed Whisperer said that it looks like the Fed is on track to do a 75 basis point hike. That's what he said. And that caused a really, really hard sell in the treasuries. When that was released, we went all the way down to 14. So that was basically the lows of the day. But since that time, we've risen up. And when I look at the volume, I do not see any kind of like auto correlated order flow to the upside. And it's a little bit odd that it moved all the way back up to the highs, but it looks like that it was just kind of like settling back into the hole that it was formed. So then we came back into this spot, and you could see it was a little quiet, but like, look, when it breaks through, and there are at points some icebergs on the bid, and the sellers are there to take it, right? So I suspect that at the moment we're getting a little bit of a lure. Like these there are black sellers out there, but they're being super sneaky right now. And they're kind of hoping that market makers lean on certain spots in the range so that they can sell into them. And then as soon as they sell into them, they back off, right? They back off, they let it come back up so that they can try and get more again. So we'll see. Right now, the order flow is definitely auto correlated to the downside, especially in the 30-year. If we move lower, it looks like it's probably going to be the 5-year that leads us. And again, when we do see the icebergs, it looks like that they're more than willing to fill them. So see it right back to 24. Well, I'm not getting a clear sign here. It does seem like they like 24. Maybe this 24 is acting as a magnet that's preventing this downside. But I mean, look, they got a pretty good downside move there. It was very short lived, though. I'm not really. I'm trying to keep a close eye on the dollar here, too, by the way, because the dollar is just been incredibly influential here lately. Although the treasuries weren't moving down with the Japanese yen and the earlier move down in the yen. Also, we're seeing a little bit of a decline in oil at the moment. A little bit. It's just like $1. It's so funny, like talking about oil. Like, what's a big move in oil and now? Because it used to be that like anything bigger than 20 cents was a big move in oil, and now it moves like $5 a day. So if it moves $1, is that really something worth highlighting or not? I'm not sure. I'm not sure. Ukraine military chief says every reason to believe war will not end this year. Okay. I'm interested to see if they trade up here 24 or what it takes. $1,400. They add a little bit more. Note though, okay, so there's 1,700. So remember here on the downside, I said there's a 1,700, but there's more than enough volume to fill it. So they did it on the other side. But the thing I would note about the other side, they did get through it, but they kind of had to coax it out a little bit. It took a little bit of time. Okay. So it does seem like, at least for now, that the sellers are a little bit more aggressive than the buyers. But I'm not seeing enough force on either side as of yet to really know if we're going to come outside of this range. And I still see that it looks like that they're mostly following the 5-year. And like the 5-year will give these hints of like, I'm going to go down, and then just kidding, it's a range. Just kidding, it's a range. But we're getting into the time period now where maybe if somebody was going to make a move, maybe we start to see that in the next 15 minutes. This has been like the longest 10 minutes ever, huh? We're reading into every tiny little tick, and it's maybe not even actually doing anything. The liquidity is a lot better this morning. By the way, we got 1400s, 1600s on. So that's something important to note. Although they've still had some slippery moves here, where all of that liquidity just pulls out of the way. See, if that in the 5-year, okay. So I'm often looking, is the offer or the bid bigger, and you know, whichever one is smaller, it's likely to tick in that direction. Just because there's less volume there, right? Okay, so in that instance, there was less volume on the bid, and then look, the 5-year ticked up, and quite significantly too. So that them piercing through that offer kind of was a surprise to the market makers, essentially. In fact, a move like that kind of suggests maybe there was a piece of news. No. Well, nothing on my news squawk. Nothing on Twitter. There was an iceberg 24.5. Still within kind of the range, although one could argue that the range is all the way up to the high. That particular move, though, I think contradicts what we were hoping to see. I am hearing stuff on the news squawk about Iran. Iran uranium enrichment. Spread in the micros here still fairly tight in the 10-year. Okay. Looks like they fell back into the hole that was created from that impulsive move up. Hmm. Okay, interesting. So if there wasn't a liquidity hole there earlier, there definitely is now at 24, right? Okay, so we should have Fed speakers here soon, right? Already said again at 24. I should note that while there is a liquidity hole at 24, they haven't been able to get any volume to sell below that yet. 800 by 800, like there's a chance. Hmm. My news squawk is talking about the Bank of Canada interest rate decision, and I'm like, but that's not for a whole hour. Oh, you know what? Let's put the music on, by the way. I don't want you to sit in silence. I'm not sure if I have a whole lot to say at the moment. There you go. Well, 5-year went up 2 ticks there, and the 10-year is kind of lagging. There you go. Hmm. I don't know. We are getting some ticks that look significant to me, but then the inside liquidity is still skittish. See, like right now they're kind of giving this, oh, okay, maybe we are going to be trending up. But like look at the inside at 25. So 47 contracts both sides. What? I got to meet my fellow students today. The oldest person besides me is 70. Oh man. Actually. Back to school. So you, oh yeah, I forgot. You did say you were going back to school, huh? Look at that. And then back down. Did they tick down back to 24 though? No. But well, that 25, 24 is a real problem at the moment. I say a real problem, but I guess in reality it's a good thing for me, right? Do you trade ES here, or are you mainly watching other markets? Well, so I have ES up here, and we definitely talk about it and follow it, but most of my trades are placed in the 10-year micro futures. So really though, so a couple of things here. Number one is that I wouldn't like follow a YouTube channel just to be like follow somebody and follow their trades and follow their style of trading. But what you will get on this channel is I have a lot of empirically proven information about the way that the markets behave that will be really useful to you. Now, some of that information kind of suggests that trading the S&P 500 is really hard because it is an index, and so there's a lot of randomness that get introduced into it because of that. But you know, so that's why I'd stick around. You learn a lot from trading the treasuries. Off topic, but I just got over, I think, the same thing you're getting over. We live far apart and caught the same bug. Interesting. Oh, I don't know. So what we had, I think there was RSV was one of them, and that might have been followed up by something else. But the baby caught RSV. So it's something that you would be unlikely to catch, because it's only like babies and old people and people with weaker immune systems that tend to catch it. But then since we're around it so much, that's how we were able to catch it. What's the NT chart code for the 10-year? I think it's 10YR. It should auto fill in if you put it in. Well, we are getting some flow to the long side here, or we have been for the last, since the top of the hour, I'd say. So right about the time when I thought things were really going our way. So I've kind of been keeping on my eye on if I need an out here, and then it will like downtick and make me think, oh, I can wait, and then it doesn't follow through. If we were able to tick back to 24, that might change the look a lot, but at the moment, I think that the order flow is still in favor of the longs. Yeah, not able to keep that 25 offered. Nothing hit into 24 half. Getting into 25 half. Not giving me good prices either. Well, I'm gonna have to bail right there. So $4 less than I wanted on a loser, but that's okay. Watch, now that I'm out, the cells will start coming back in. I'm seeing a lot of people on Twitter tweet about the Nick Timiros story. So let me pull that up here. I'm not sure. Yeah, it's 10 YR or 10-year macros. Oil is getting creamed here. Huh. That might be the case. So it depends if you're getting so you're getting data from the CME, and you know, if you pay for the bundle, then you get it. If you pay for the CBOT data, then you get it. But if you only paid for equity indexes, then you might not get it. Although I would think that you would still be able to get a chart to load for it. And if you're in NinjaTrader, you're going to have Kinetic, right? So you should be able to get 10YR. One thing I would ask is, are you sure you're on the latest version of NinjaTrader? Are you on, let's see here, what is the latest version of NinjaTrader? 8.0.26? Well, this is a weird. As soon as I was starting to give up on it, I'm starting to see a little bit of auto-correlated order flow the other direction. Although oil is really getting creamed here. They, you know, was saying, oh, oil's on the downturn. It's not looking good. It's too good. That was like $3 ago. $3 ago. I mean, I am seeing selling, but it's just not. Neither side, nothing conclusive still. Given the time, I would have expected to see something a little bit more forceful. And again, we do have like Fed speakers going on at the moment. Yeah, it's not really. In fact, I'd say they got back to that 26 a little too easily. Yeah. Well, this is odd. We are getting volume. Still seems a little iffy. Oil to 6 months lows. Well, oil declining there is not. Could be causing a little bit of a bid in the treasury, right? Oh, 8.023. Yeah, that might be too old of a version. I don't know. I can't think of a scenario where you'd have NinjaTrader and you wouldn't be able to at least pull up a chart. You might not get like top of the book, but So I tried that twice. Did not work out. I don't think I'm getting my trade today. Doesn't look like it's doing what we want. I'm not sure if this upside action is something else. It may just be randomness. It may just be the market's not really doing anything, and so they're deciding to move to the upside. Like, we saw a little bit of a sell come in, and then the buys came in. There really was quite a bit of buying. Well, how much? About 3,000 contracts? 3,000 contracts? That's not a lot. That's got to be oil. Probably, yeah. I think that's being driven by oil crashing. How do you work that one out? I don't know. What is going on in oil? So, like, we've seen oil decline in periods where it's like, yeah, there's real concerns about global growth out there and all of that sort of thing. This one really feels out of the blue to me. I'm gonna go check on something. I'll be right back, okay? Feels a little hot in here, but I don't think it's actually that hot. I'm thinking, well, so first thought is that here on the markets, I was looking for a sell. I took a little bit of a risk. I think I lost a little bit more on it than I should have, but it's not a huge deal because it was still a tiny loss. But I'm feeling myself here. I seem to be a little bit more stressed out about it than I should be. I can just kind of feel the physical signs of it. My body might be acting a little sensitive because, I don't know, inflammation and stuff. But I'm thinking here, you know what? If we get a sell like you're hoping to see, there'd probably be plenty of room to jump on later. So, but I'm not seeing the evidence of like block sellers coming in. So what I'm seeing right now, I think is suggestive of, you know, block buyers that are not have any relation to like the news, like what's going on and stuff. So we could still see something where, because of the Bank of Canada or because of something that a Fed speaker says, that we do get a sell, right? And then I could probably jump on it. Decent offer in ZB at evens. There's some, one of the things is that the overall liquidity is pretty thick, right? Looks pretty healthy, liquidity wise. And one thing would make me think, well, maybe that's because there's these bigger guys involved in the market buying it up. Perhaps. Could be the buyers doing that. But I'm also kind of thinking, well, but a lot of this action has been kind of dull. So maybe it's just that the market makers think that the conditions are better for it now. What the heck? What is this? AOC on the cover of GQ magazine talking about men and masculinity? Okay. That one's a little left field for me. Well, it's totally the sort of thing GQ would do, but I'm still, that's not one that I might be just seeing that and just being like weirded out for no reason, but that looked like something that there might be a lot of discussion on the internet about. I guess it depends on what she says, but well, now we're seeing some stop runs in the treasury on the long side. S&P 500 rallying at the moment. I don't know, man. Okay, so Nick Dimiros says 75 basis point hike. Market was pricing maybe 65% chance hike, but they're still unsure because, the next CPI report will probably be really key, right? So Treasury kind of ignores it and oil starts plummeting. So the move up in the treasuries seems to very much coincide with oil breaking 86 and starting this huge downtrend that it's had. So I do think that oil is a factor here in the move in oil. And then the S&P 500 is rallying, presumably because it likes lower oil prices and lower rates. I mean, that's what it looks like. That's what it looks like. But I don't think that all makes sense in the larger scheme of things, right? Oh man, speaking of stop runs, the 30-year had like some crazy stop run there. I think that volume there it doesn't say like, Seth, you were like dead wrong per se, as much as it was like just showing you how many people in the treasuries are getting displaced here, is what I think that is. But that's the sort of thing that now that this is going, I don't want to be the one standing in front of it, right? It could exhaust itself, but you're well on this level. We come over to a volume profile chart. Well, so 30 is a key spot here. So I think that they might get 30. We are seeing reloading here at the top, although in this action that's not going to be a reliable indicator, but there is a reloading. I guess what that does suggest is that if we do continue to go up, that there could probably be enough trend to get us to the 116 even. That's what that kind of suggests to me. Oh, Jim Iorio got blocked by Kathy Griffin. That's funny. Jimmy, what did you do? There's a lot more in activity in Discord this morning, by the way. So it seems like people are coming back from the summer. Dude, that GIF is awesome. Look at this GIF. This guy, they're saying it's a bundle of sticks, I guess. Throwing this huge stick into a pile. That guy, I like that. Makes me want to go back outside and throw things. I was lifting weights, but I kind of wish I went heavier. I kind of want to go heavier. Well, we'll go heavier today. We can do that. Oh, by the way, did we see a rise in the Japanese yen through this? No, we did not. The Japanese yen did not rise. The dollar did not, or sorry, gold did not rise. We did see a slight decline in the dollar. We did see a slight decline in the dollar through this. It's still reloading here. Like here, I'm gonna just take a sim scalp here. That's probably good for a tick at least. Actually, I don't want to take on more risk if it falls below that. Oh, I'm not gonna get filled. No, I got by this. Reload. It's still iceberging there. 28.5. Taking their time on it. They're like, oh, well, Seth went long. That means that we can't go yet. Octavius pointing out there's some heavy MBO offers up in here. Well, up at 29.5, there's like a lot of 2000 snack right there, right? There's got to be something bigger going on in the market that I'm not privy to. You know what I mean? This is one of those ones where it's like corporate issuance or something like that. No. I think it's oil. No, I'm pretty sure it's oil. But why is oil collapsing this morning? Well, what are our oil guys doing? What are the guys on oil doing? No oil report today due to Monday's holiday. Oil continuing to collapse was not on my bingo card today. Was it on yours? Sure enough, I did get my fill there on that tiny little scalp. That's an easy one. Take us back to days when you could get paid to take delivery of 1,000 barrels, right? And did anybody get some oil barrels delivered to their house? That's 1,000 barrels delivered to your house. I've heard stories like that. Given what I'm so this is really interesting because what I see in the liquidity compared to like what the volume has been kind of suggests that it's going to be really difficult for this trend to continue, but the flow appears very, very strong. And I don't think that they would be putting those orders up there unless they thought that they were going to get filled. Look at how much is at 116 now. That like now it's 5K. That's a lot. And like they continue pushing. Five-year in particular. Oh, forgot, you know, the S&P 500 has been going for a whole 2 minutes now. Yeah, FX macro oil breaking down along with other commodities should help bonds and risk today. So like again, if you thought that Europe was just completely screwed, what do you do? Well, for one thing, I don't think you want any assets in Europe. So you want all your stuff in the US, and hence the dollar significantly stronger, right? Well, then the next thing is I think you'd want to be long energy. So that would mean like buying natural gas, oil stocks, and then other stuff that's just like more general energy, right? And if you were doing that, that was like part of my theory, not one that I traded or allocated anything to, but if I had, that part would be doing dismal. I mean, come on, oil is down almost 5% now today, and it was down pretty big, yes, you know, this past week anyways. So that's a pretty big decline. It could be, though, that the oil and energy markets are just really ahead of themselves in the short term, and that they're going to have to like really get behind themselves in the, you know, long 3 and 6 months treasuries is where you would be hiding. Well, it would be working today. So like, here's the thing. 75 basis point hike in September. 50 basis point hike in November. 50 basis point hike in November. At that point, if treasuries were to stay where they are today, that would mean that the federal funds rate is offering a better yield than the 10-year yield. Like, that's just retarded, right? I mean, theoretically possible. Possibly has happened in the past, I think. But it doesn't make it any less retarded, right? So that, you know, in order for this kind of a move to like really hold, you'd have to be saying they're not going to do a 50 basis point hike in November, right? But what is it that they're seeing today? What is the event that's today that's like, oh yeah, this is really bad for oil. We need to buy treasuries, all, you know, all that. I don't. EU will propose a mandatory target for reducing electricity use at peak hours, says statement. EU will propose a cap on revenues of companies producing electricity with low costs. I think that if you're going to do something like that, because really the whole thing of like somebody did well and so we're going to take extra money from them, that really messes with markets. If you're going to do something like that, at least like give them a carrot as well. It'd be like, well, we will tax your revenues that year higher if you're in this industry, but you know, if you invest all of that into new energy production, then it's not going to count as, right? I mean, maybe it works. I don't think it works that way, right? When Volcker took EFFR to 20%, the spread between EFFR and the 10-year yield was almost 5%. Wow, really? 10 reached the middle of 15% handle at the peak. Wow. Okay, yeah. Well, I thought that there had been, I don't remember how I know that, but I knew that, or at least I thought that there had been a time where the federal funds rate had been higher than the 10-year yield. That's probably not something that can last for very long though, right? And the issue that I see is that I think that the base case is still the Federal Reserve gets interest rates to like 3.5%, and then they leave them there for years, leave them there for years, at least until like 2024. To be honest, the market has been pricing like, oh, they're immediately going to come back down. Why? As long as we're in an inflationary regime, they're going to have to keep interest rates high. And even if we have like a recession, those inflationary pressures probably won't go away for a few years. So then you're just in the same situation where, okay, so you have deflation, you lower interest rates, and then when you recover again, you're going to get more inflation on it. They were inverted for close to 2 years. Okay. Because it's kind of hard to come in and say, okay, so if the federal funds rate is 3.5, what should the 10-year be? And then the 10-year should be lower than that? Okay. There's got to be some calculation people are making that makes them say that, but it does not one that makes sense to me. Well, where did I get long from? How much of a move to the wrong side did we get? Okay, so like 3.3. So maybe $30, not a big deal. I'm not feeling too FOMO yet. When it gets like $50, $70 the other direction, then I'm like, oh, I missed such a good move. No idea why it slips everyone's mind that the funding for every kind of underwritten loan is done at the front end. Can you expand on that? What do you mean by that? The middle and far end are just held as collateral. Oh, okay. So you're saying that like banks don't buy 10-year treasuries to underwrite a loan or anything like that. Banks buy 10 and 30-year loans, treasuries to hold as collateral for large transactions that they're going to make. Yes, that's true. For sure. Well, I've always said like the main reason you bank, like the reason that the treasuries I think are different from other assets that people typically try to claim as like are a flight to safety. Like people will say, well, when things are getting scary, people go and buy gold. Well, gold can be thought of as a flight to safety trade in some instances, but the driver of that is just people. It's just people's beliefs that gold should be a flight to safety that kind of creates that. Whereas what causes people to buy treasuries? Banks buy treasuries because they have to. They literally cannot do their business without them. Right? At the moment, though, you do have to wonder why anybody would want to have them. You know, you wouldn't want to have more of them than you need at the current time, right? They have to, and your principal is safer less if time is not a problem. Well, a little bit more of a pullback here. Oil is kind of, let's put it this way. We got a blue candle. I got a blue candle in oil. So over the last 5 minutes, they did have an up move in oil. And since then, the treasury has kind of just been settling and ranging. They were not able to push through all of the liquidity to get to 116 even. And in fact, the volume in the 10-year has been the other direction. And they have canceled out almost all of the buy. So that's a little weird. Look at how aggressive that one was. Although those bids aren't jumping out of the way, so. We got 15 minutes to the Bank of Canada decision too. You know, I don't know enough about what the Bank of Canada is doing to really game out what we might do off of that decision. I mean, I would be leaning towards anything coming out of a central bank right now being hawkish. But this is an awful lot of trade and movement ahead of such an event, right? Remind me, do we have any economic numbers coming out? No. I also didn't really hear anything from Barkin. Look at that, 25.53. So that, what I'm seeing right there kind of says to me that at least some people are trying to buy the dip and for continued up move. Although that iceberging could just be the buyers that have driven this whole move, right? Bridge collapses during ribbon cutting ceremony in the Congo. What the heck? All right, let's watch it. Wait, what? As soon as they cut the ribbon, it starts. What the heck? Too many people on the bridge or something? Like, what the heck? They rush the people off. Oh, man. Don't worry about the Bank of Canada. Tiff's Macklum's total publicly declared wealth is in real estate. He won't do anything that real is. Wait, what? Isn't that the new UK person? Sorry. I'm a little these are new names and I don't remember who this one is. I thought that was the UK. Oh no, this is someone else. It's a Canadian banker. and economist, always the governor of the Bank of Canada. Gotcha. I see. You're saying that he won't, he doesn't want to raise rates too hard. Bank of Canada raises 3 booster shots per person. You know what's funny? Like, part of me kind of wants to talk about vaccines, just because we should have more data now about it, right? Some of the things, some people were right about some things, some people were wrong about some things. Now would be a good time to have like a little bit of a post-mortem to see, you know, what we can maybe improve upon next time. But nope. Everybody's too afraid to talk about it. I'm too afraid to talk about it, to be honest with you. And I don't think that I should really get too deep into the research on vaccines here during a stream. I think that YouTube might be upset about that. Like you can see very clearly in social media the effect that the censorship that we've seen over the last 2 years has had. And people really are genuinely avoid talking about certain things on social media. You see it on TikTok. There's certain things that people just like straight up don't talk about on TikTok. It's kind of funny, the sort of thing that will like really get your video like throttled on TikTok, because, you know, they allow there's, you know, a lot of really salacious content is at the top of TikTok, right? But then there's those things that, like, if you say something about it and it picks up that's what you're talking about, it throttles you. So like visually you can do anything that you want, but you can't say certain things, right? It makes being a creator a lot less interesting. Luckily for me, I've always got trading right. Being a creator doesn't have to be interesting, because trading is interesting and we're focused on that. I still think about that banning on r/science where one of the mods declared the data is from a pharma company. They are not trained in stats, and so their stats are meaningless. Ah, man, Reddit is just awful these days, man. So something that I've seen on Reddit that I thought is really interesting. During the pandemic, there was a lot of interest in economics. Like in 2021, if you got on the r/economics subreddit, there was a lot of activity, and there was a lot of people pushing the Democrat line. There's a lot more people kind of saying things, even though they might not realize that that's what it is, but in support of like modern monetary theory, for instance, right? Just I think because there was a lot of people interested in economics and the stock market at the time. Well, that has kind of all cooled off, and so now you go to the economics subreddit again, and your traditional economic thinking dominates the top again, and then down towards the bottom you get these crazy people that try and push Democrat talking points. It's really weird to watch. So it really is the case right now that many Democrats are just way off the mark in economic thinking. So it doesn't really match up with what you'd typically expect to see from a Democrat, right? Democrats are the ones, they believe in science. They're going to be more likely to try and use a study to back up their point. They consider themselves educated, etc., etc. But what we find is that they're very, very just as willing to overlook the facts and data when it doesn't support their argument, just like anybody else is, right? So here you get this situation where they're totally want to back you know, they want to go against the establishment anywhere that they can, except for economics. Except for economics. And then you got this counter thing going on, which is that even though Reddit absolutely hates all of that stuff, the money still speaks and wins over there. And so it's very difficult to say anything super anti-pharma or any of that anywhere on Reddit. It's crazy. And I watch this happen. It's like everybody else sees this, right? Everybody else sees this. They still love the site? Okay, so there's 116 even. So remember when I said, well, it looks like they are loading up still down here. So maybe they're just loading up for the next leg. Well, there it is. They touched 116. I'd like to think that they're likely to clear 116 even. So I think I'll take another sim trade right here at 31. I think that when things really extended there, like when we started getting the stop runs, I think that really killed any chance of us getting a short trade today, right? Oh, okay. It already filled it. I didn't catch that. I'll do it again if they give it to me. I'll just take that one tick there as many times as they'll give it to me. Oh, there's an Apple event today, eh? Rumors involve a 48 megapixel camera, a faster chip, better battery life for the iPhone 14, and an Apple Watch Series 8 containing a body temperature sensor. Well, I don't think that I'm going to get filled again at 31. Oh, maybe actually I will. Shouldn't have said anything. Now they're like, oh yeah, Seth, we'll fill you. Well, I don't like that pulling there. Let's come over to Zero Hedge here. Western Elite sanctions fever. We'll see common people freeze. And wreck lives, says Putin. Well, who cares what he thinks? Tucker Carlson says elites are making things worse on purpose. Do you think that's the case? I don't think they're making things worse on purpose. I think they're just stupid. Am I wrong? Am I wrong? Should only do one contract here. Like that's more excursion than I was expecting already, right? Brent crude plunges below $90, posing a major challenge for OPEC. Devices, feels like there's no interest in buying in the indices at the moment. Everybody is bearish now. So far, we didn't have any squeezes to the upside. Yeah. Well, I don't think that the indexes would get all too excited about anything until like 39.50 again. they could be doing things on purpose they think will do good, but ends up doing the opposite. So but that's what I'm saying. I don't think they're making it worse on purpose. I think that they're just that clueless. It's not so like here's the thing. It's not like elites are stupid. It's that people have too much faith in themselves. People have too much faith in themselves in something that any one person's ability to actually understand is very limited. Like we really need to listen. If there's something I think the next generation could learn that would help them avoid the problems that our generations are having, okay, it's this. These systems are too complicated for you to really understand. These systems, you're not just going to eye it, take a basic course on it in college and understand the market. You won't. You don't have enough information to really understand it. Now you can do a research study and you might understand small pieces of it, but it will always be the case that the market is a complicated beast that we don't completely understand. And as such, we really should be careful about manipulating the markets for our own purposes, right? Because what I'm seeing is all these countries going, oh well, we can just bail everybody out and buy these things and it'll be fine. No, those things have consequences. They do. I promise. In the long run, they will have consequences. I haven't seen one who wasn't suffering from Gelman. You've been using a lot of words lately that I don't understand, Akshay. Oh. Okay. So Michael Crichton explains this. Briefly stated, the Gelman amnesia effect is as follows. You open the newspaper to an article on some subject you know well. In Murray's case, physics. In mine, show business. You read the article and see the journalist has absolutely no understanding of either the facts or the issues. Often, the article is so wrong, it actually presents the story backwards, reversing cause and effect. I call these wet streets cause rain stories, papers full of them. In any case, you read with exasperation or amusement the multiple errors in a story, and then turn the page to national or international affairs and read as if the rest of the newspaper was somehow more accurate about Palestine than the baloney you just read. You turn the page and forget what you know. Huh. So I was watching, we were talking about words. I saw a, oh gosh, what is his name now? He who shall not be named on social media that has been banned. Okay, so Bank of Canada, 75 basis point hike as expected. They gonna sell this? Well, there was a knee-jerk sell reaction to it, but dollar's strengthening here. They're still talking about concerns about inflation being entrenched. Okay, so anyways, I saw a Tate TikTok, and he said he was presbycuous. Am I saying that right? I was like, what the heck is he talking about? Apparently it means that like you're very perceptive about systems. I was like, oh wait, am I presbycuous? Maybe. Here's the thing. I run into this all the time, okay? Like, I think it's most commonly in politics, okay? So people will say, well, oh, hold on, they're still talking here. It's hard to talk with that voice in my head. Okay, I'm hearing stuff about Fedsmester, but it sounds like they're saying nothing new from her. Anyways. So, like, the thing is, my opinion of politics was not something that I developed when I was a kid, for instance. I think that a lot of people, it's like they form their political opinions when they're teenagers or early 20s, and they kind of keep that, and then maybe it changes a little bit later in life when your values, when the things that are important to you change, right? But what I found was, you know, like I got really involved in the politics and I worked for campaigns and things like that. And what I started to find over and over again was the people that I thought were on my side weren't. They would say one thing and then they'd get in office and they did the exact opposite. I've had politicians, they lie straight to my face. So the one that I remember the most is there's the Salt Lake County mayor for a while was named Ben McAdams here in Salt Lake. And when he was running for office, he was trying to get our endorsement because we were working on making Mill Creek a city. And he's like, oh no, we totally want you to become a city. And here's all these ideas that we have about, you know, how we can do this that would be fair and everything. First thing he does when he gets put in office is like try and pass a law that would basically make it impossible for any of the unincorporated areas in Salt Lake to form into cities. You literally, like we had him there. I asked him questions. Like at campaign events too, because we ran across him a lot. He was always really friendly to Republicans, even though he was a Democrat. He lied to my face. Right? So what do you do when the politicians, they just lie to you, right? Well, the thing that I've learned about politics is that you can't think of politicians as people. If you go in and you say, this politician, he seems like a good guy, and I know that if I put him in office that he's going to do the right thing, that's naive. It's naive, folks. Systems, groups, collections of people are more powerful. So you cannot think of a politician as a person, because the systems that are behind him, that are influencing him, almost always win. No person is strong enough to resist that. Like, the reality is that if you get somebody in office that is strong-headed enough to resist that, aka Donald Trump, they don't stay in office for very long, because the very people that put them into power will not let them stay in power. They'll take them out if he's not serving their interests, right? So you cannot think of politicians as people. You have to look at who's supporting him, like especially what groups are supporting them, and what do those groups want? What are their interests? Are those interests the same as yours? You have to vote based on that, right? So I didn't come to these conclusions because I was like so smart, or because of some sort of ideological framework that brought me to this point. No, and it's the same with trading. I don't tell you what I do about market microstructure because I came to some sort of ideological belief about the way that the market is, and then built all of this stuff around it in correlation with that. No, it was because I failed at these things over and over and over again, and basically came to the point where these were the only conclusions left to make. Right? You've tried everything else to the point that it's undeniable at this point. Markets are statistically efficient. You can only try for that. Listen, I'm a smart cookie. I know that's really egotistical to say, but I've always been told by people that I'm smart, okay? And I know I'm a really good programmer. I can program just about anything. And I spent a lot of time there in NinjaTrader backtesting strategies. I learned a lot. I found a lot of interesting things, but the most important thing that I found backtesting things in NinjaTrader, markets are statistically efficient. There's just no other way around it. And if you think that you're going to find something that I didn't find, then by all means, go ahead. Maybe you are smarter than me. There's got to be at least a few people here listening that are smarter than me. Maybe they'll figure it out. But if you don't think you're smarter than me, I wouldn't waste your time, right? Wouldn't waste my time trying to find those statistical inefficiencies. Well, they never fill me at 31.5 again. There's been quite a bit of adverse excursion on it, though. So, the end result of all of that was what? You're a trader here, right? We want to think that we know what's going on. We want to think, oh, I found a pattern that has it all. No, you'll never have it figured out, folks. There can be these small windows where you have enough information that you're ahead of the market and you know which way it's going to go and you can trade it. There are these small windows where you know it's a risk, but you know that it might go one way or another. That's kind of what I did today, and it didn't work out. Okay. Bad trade. Didn't lose too much on it, right? But you're never going to figure the whole thing out. It's not possible. Our human brains can't comprehend it. It's too big. We never will. And all of these retards out there are making all of these decisions on the premise that they do understand it. And that's why we have so many problems in our world. It's because our leaders are not humble about what we know and don't know, and what the limitations of our policies are. They always think, I just need to implement this policy and everything will be fine. No, it doesn't work that way. Doesn't work that way. Hopefully, in the future, our institutions, the things that kind of drive the politicians, become smarter about this stuff. Maybe, if Europe, man, maybe if Europe gets punished enough this winter, they'll finally admit, we only know so much. Something tells me that it might take a little bit more than that. So there's my pontification for the day. Well, it looks awfully close, but they're not trading 31 yet. So I'm looking at oil here. They have had like pullbacks and ranging now for the last 30 minutes or so. But there's still kind of, it's a more of a skidding along the bottom sort of a trade. So that's not very good. No, it seems like they're even having a little bit of difficulty holding 30.5. So, like when I look at the 10-year, some correlated order flow to these highs by about 8,000 contracts. And then they gave up almost all of that. And then when we busted the highs again, that it all rushed in all at once. Since then, we've been slightly to the downside again. So it's not really all one way. The flow is not really all one way, but definitely tilted to the buyer side today. What's the drivers there? Well, it looks like that the big move in the treasuries coincided very much so with the drop in oil. Octavius asks, what's the news for the sell-off in oil? I don't know. So let's read a story about this. From Zero Hedge, Brent crude plunges below $90, posing a major challenge for OPEC+. Oil is tumbling this morning with Brent slumping below $90 to the lowest since February and WTI dumping below 84 for the first time since January. As oil prices in the highest odds of any asset class what does that mean? As oil prices in the highest odds of any asset class, Goldman pointed out last week. Let's see here. What's this chart? Post price rebound, the commodities markets are pricing significantly below recent peaks. Judging by recent price action, commodities are pricing a recession more so than any other asset class. Okay. No, I'll take like maximum risk on this, but the drop has obviously undone all of the earlier gains after Russia's President Vladimir Putin underlined that his country won't supply oil and fuel if price caps on the country's exports are introduced, which briefly pushed oil higher. Putin's comments followed the G7's most industrialized countries agreeing to back an oil price cap for global purchases of Russian oil. It remains unclear how many countries have signed up to put limits on Russia. The renewed weakness, which according to Bloomberg's Jake Lloyd-Smith is driven by a nasty combination of demand concerns plus the dollar's jump to a record, will test OPEC Plus's appetite for further action. When the cartel wrapped up its Monday meeting that endorsed a token 100,000 barrel a day cut in production, it also highlighted it would be willing to call another gathering anytime to address market developments if necessary. Given the next scheduled talks are not until October 5th, a full 4 weeks away, the latest sell-off raises the possibility of an ad hoc session before then. After the tiny reduction in supply, OPEC Plus kingpin Saudi Arabia showcased that OPEC Plus would be attentive, preemptive, and proactive in terms of managing the world's most important commodity market. Those very public comments plus the subsequent weakness in prices may herald a test of Riyadh's resolve. What's the correct way to say Riyadh? Riyadh's resolve. Meanwhile, even as oil slides, the price of regular gasoline is once again rising in California after steady declines since mid-June reversed course over the Labor Day weekend. The end of the peak summer travel season typically brings lower fuel prices, but this year, a lack of imports and a refinery hiccup combined to drain stockpiles, sending wholesale and retail prices higher in the past week. Rising bump prices exacerbate the energy crisis. Californians are already facing a punishing heat wave and possible blackouts. So, what's the news for the sell-off in oil? It doesn't seem like there is any. It looks like this is just kind of a backwash effect of sorts after all of the craziness from Russia and OPEC and so on and so forth. And the market seems to be suggesting that the commodities markets believe that a deep recession is in store for us this winter. That's what it looks like. Well, I came close on getting my fill on this one at 31.5, but it did not work out. Obviously, if I was taking that live, I wouldn't be so silly to leave a stop so large, but I think I'll take it off right there and cancel everything. I did catch 2 on the way up into that though, so like that actually still puts me only down a tiny bit. Could probably make 2 ticks back. A main driver for oil decline, in my opinion, are also lockdowns in China. 49 Chinese cities are in strict lockdowns now with 291 million people. Good observation, Tobias. This is something that we don't really talk about anymore. I think because, like, I don't know. Like, the first time that happened, people were really freaked out about it, right? And then, like, every time that it happens, the market reacts to it less and less and less until it's, like, barely even in the headlines anymore, right? Yeah. Well, I'm seeing some really... I'm going to try one more here. This isn't a very good spot, but... I am seeing a really huge shift in the volume in the treasuries here since that high. I need to reset things too. It's not a very good spot because you got this big order at 26.5, right? Okay, so there's a nice break at 27. So the liquidity on both sides of the first 3 prices or so has increased. Okay, Fed semester is getting questions now. It's a virtual event. Hmm. Hmm. She says it's better for the markets to focus more on the path of interest rates rather than any one particular meeting. That's an interesting comment. We're caught in a zipper now around 27.5. Man, that 30-year really reversed. Like, it was a good 3,000 contracts long and then 4,000 contracts short, something like that. Like, we're at lows of cumulative delta on the day and everything except for the 5-year right now. Probably if we're going to move lower, the 5-year is going to have to break a little bit. But Powell is speaking tomorrow? I haven't looked at the calendar that far. She is avoiding saying anything about what she wants to do for rate hikes. Oh yeah, so we do. We have Chairman Powell speaks due to participate in a moderated discussion at the Cato Institute's annual monetary conference via satellite. Audience questions expected. That is tomorrow at 7:10 a.m. Getting volume both sides here, 27.5, 28 in the 10-year. In fact, the volume may yet be reversing once again. Because here on this spot, at least 2,000 to buy 28, 680 to sell 27.5, right? Is a little bit thicker on the bid side too. I see a couple of things longer term that kind of suggest to me that maybe we could push back down. But that particular spot just doesn't look very like a great spot. I knew it when I clicked in. But I said, well, it could, I don't want to miss anything. Well, that didn't happen, so... She's still talking. She won't say how much of a Fed increase she supports in September in the interview, though. It's the biggest headline coming out of Mr. right now. Let's see here. Alligator quite strong, but well absorbed, not waiting anything significant before ECB tomorrow. The only uncertain factor at the moment. Yeah. Well, but there has been a lot of flow here today, considering that it's supposed to be ECB tomorrow, right? Hmm. 1,000 by 1,000 at 29. That's probably good for one on both sides. You buy 28 half, you sell 29. If it fills, I don't think it will actually fill. So I did get a little, like when I took it, it was, oh no, actually it says that I never got a favorable tick. Well. I guess I just don't have it today, folks. But could be that what we've been seeing all this volume, while it is all very interesting, may actually be not really significant in the long run because we got an ECB meeting tomorrow, right? That could be what's really actually driving things. Whoa, Citi says high European gas prices to stay until later in the decade, reports Bloomberg. It will be somewhere between 2025 and 2027 that we'll see the prices in Europe coming back to where they were at the beginning of 2021. What? Oh boy. That sounds like something that means that you're going to have to keep interest rates higher for longer, doesn't it? That's a real problem. If that's true, that's a real problem, huh? Bad for Italy, Spain, and those folks. Ah, nice. So that's what Christine meant by inflation moderating in the medium term. Right. But here's the funny thing is that, again, what does that mean? Oil declines. Well, we're maybe seeing a retracement now. Oil's pushing up at the moment. Somebody's buying the oil from that one, but the treasuries are going up too, so that the treasuries don't seem to be reacting with the oil. Oh, what's this? Gold's spiking really hard here all of a sudden. Gold spiking, oil coming up. Am I seeing anything in like corn? Maybe. Corn, copper. It kind of looks like maybe the commodities are staging a comeback here. S&P 500 rallying as well. Yeah, D says it's a nice run in gold. Here's the S&P 500 about to break highs. Not quite there. It looks like there's some absorption against it. Whoa, 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 whoa. That was a lot of volume that just went through there in the 10-year. It actually price. Okay, so there's a stop run in ES. But what was with that? Like 4,000 contracts that just went through in the 10-year. That seems like a significant sell. I am not convinced that inflation has reached its peak yet. Medium and long-term inflation expectations remain within 2% inflation target range. Very tentative to that will determine the size of rate increase at the September meeting of them. So if I were to make a call on Fed semester, I would say overall hawkish, but has not really been any reaction whatsoever in the market. They're possibly pivoting here in the Treasury. We'll see. They're kind of the upper end of the range at the moment. There was some significant selling in here, but it hasn't had seen any follow through. But somebody seemed to sell about 4,000 contracts in there. Uptick. Guess not. Is oil still rallying? Tough to call. Nope. Well, I give up. Just been terrible today. I mean, they've all been sells today, so all losers, but think I have a hang of the market, and then nope. Did see, by the way, even though like it seems that there's been selling through this, there was like a rise in the Japanese yen and the dollar has fallen down through that. So that's what screwed us over on that trade. Not sure what to make of that. That's kind of odd that in the end the dollar is pushed lower. Although that's a different correlation from what we've been seeing in the treasuries lately, right? Oh, actually, no, it's not. No, it's not. Dollar weaker. Lower interest rates. Policy lags are a consideration for the future, not now when inflation is so high, says Fed semester. Yeah, oil finally gave up the 90s. I feel like there's something wrong with me today. I don't know how to put a finger on it. I don't actively feel bad, but I do think I don't think that my decision making today has been the best for some reason. Maybe I'm just spent. Maybe my nervous system is just tired. But that string of trades is all a little bit like some of these were like in the absolute worst spot that you could have. Like that last one was exactly where it pivoted and I rode the whole thing the wrong way, right? So I'm like really off sync with the market. I mean, your ability to catch those sorts of things is gonna it's always a little bit limited anyway, so that's gonna happen to you. But And again, the scenario that I thought was going to play out today is not playing out. I think I was wrong on the fundamentals. But it seems like there's something else going on in this market that I don't really understand. It could just be as simple as concerns about a recession now. Market being held hostage by some old guy in a central bank? Nah, I don't think so. It is a little weird to me to see yesterday's move get retraced so heavily when we got an ECB meeting tomorrow. So I don't know what to make of that. It looks like that if I had held that one sim trade that I bailed on, maybe you'd get it now, but either way, that was a bad trade too. And with about 20 minutes left, I probably won't be taking another trade today. Which sucks because that kind of, we had some big winner Friday and that kind of, we just gave that up. I mean, it's still okay, but would have liked to have seen that play out a little better. Wish maybe I should have just said, something's wrong with me today and not only have taken the first one, right? That would have been better. One in 4 young adults are getting mental health care. Jeez. Yeah, one headline that I'm seeing that is not one that I hear very often is New York Fed says global supply chain pressures fell in August. That's not a headline that I normally hear. That might be some of the rally here. I don't know. Do you buy it on it extending above 116 and pushing to maybe? Well, oh, that's a tough one, guys. From what I'm seeing at the moment, I think that it would be very difficult to see a really strong rally beyond 116. At least an extended one. Like, there's probably going to be a lot of volume trade at 116. And that could kind of pull them back down if they decide to try and extend. Michael Berry tweeting, no, we have not hit bottom yet. Watch for failures, then look for the bottom. 2 SPAC ETS failing is not near enough. Did you guys see that the Trump SPAC was like getting crushed? So they needed to vote on an extension. They needed to vote on an extension because regulators were holding up the merger. And they weren't able to get the retail traders to vote in to extend it. So since they can't extend it, they'll just have to liquidate this back. Right. Meanwhile, Rumble also has a SPAC that's going in it and has been taking off, is up about 30% on the week because of the increased traffic to Rumble. I want to take a look at it. We might try multi-streaming to Rumble or something. But Rumble's back. I forget what the ticker symbol is, but I don't think. Well, I think that they have the same risks as the Trump one, right? You have an interesting paper? Shoot me. Don't shoot me. Send me. Give me that link. Give me that link. There we go. Go to the site. It's from the New York Fed. Tick size, competition for liquidity provision, and price discovery. Evidence from the... Oh, I think I've read this before, actually. Mm-hmm. We find a significant shift in price discovery towards the cash market, which then reverses when the futures market tick size is reduced, suggesting that the finer pricing grid in the cash market allows traders to act on small information signals that are not profitable to exploit in the coarser pricing grid of the futures market. Our findings suggest that reducing the tick size in tick-constrained and highly liquid markets like the treasury market is on balance beneficial. In other words, if they decreased, if they doubled the or halved the tick size of all of these instruments, it would be better for the market overall. But yeah, I have read that before. I'll read it again though. See, here it is where I'm like, okay, let's go long. It's too late for me. It's too late for me, folks. Sim, sell 30 half. That would have been a much better trade. Long the dollar, maybe? Oh, that one hasn't been working out this morning, has it? How big of a move is that in oil? That one looks like one of the biggest. Okay, so it's still just a recovery of yesterday's downside moves. They'd have to be above 1730, 1740 before I would be like, oh, is this a signs of a longer term rally in gold? Then the rally in oil has stalled, so they may just settle around 84. I wonder on this move today how much of a factor the higher liquidity has played for us. Because there were times where I could have caught good trades, right? Short. Well, there was at least one trade that I could have caught short that would have been good at least. But I think that I am like off sync because the liquidity is different. I am quite tempted to just come in and go long rates again here. One of the things is that I feel like when I look at this chart, daily ZN, I look at that one and I'm like, I could have done so much, you know, because I think that up here I held one. Like here was where I made like $100 or something, and then somewhere in here I took it off or something like that. But it's kind of like, oh, you really could have just swung it the whole month, couldn't you? At least to there. Of course, I would have to roll it over now. Bitfinex tweeting this guy where they're saying there's a Celsius network filing is bonkers. In the long and short, state investigators believe it was a Ponzi scheme as early as 2020. And Bitfinex says, I thought it was a Ponzi scheme in 2019. I was like, yes. Have you tested the correlation between rates and the dollar? Well, I've looked at those sorts of things a lot. The thing is, correlation is a really complicated thing, right? There's a lot of complicated math you can do. But the thing that I have found is that the correlation on a very short time frame, like on a minute time frame, is not strong enough for me to really rely on that sort of a thing. So, as the basis for a trade, rather. So really what you got to do with the correlations is you've got to say, okay, it moved. What were the correlations? Did anything else move at that same time? And what might that tell us about why the market is moving right now, right? That's why like the push higher here and in the treasuries coinciding with oil, I think is really significant, right? And the correlation lately has been that as the interest rates get higher, that the dollar gets higher, which means that you're getting an inverse correlation with the larger treasuries. But that's not always going to hold. And we've certainly had periods where we're like, is there a correlation with the dollar? And we can't find anything very significant. So it's been a much more recent thing where they seem, like the past 2 weeks, where it seems like there's a good correlation. Some signs that the treasuries want to fall out the bottom, but it's very much in a rut here at 30.5. Bitcoin bets look bearish as futures trading hits record level, says CoinDesk. The number of outstanding futures and perpetual contracts on Bitcoin rises to a record, and traders are paying up to bet on further price declines in a market that's already bearish. When I say dollar, I mean DXY specifically, yes. But when we have expectations off, ECB dollar can get weaker solely on the premise that they're going to raise rates and euro will get stronger. I mean, dollar index is basically euro. I wouldn't. So there's a couple of things to unpack there. I mean, the euro is the strongest component. That's true. Okay, but I wouldn't say that it's basically just euro. But the bigger thing here is it kind of sounds to me like you're saying that you're bullish on the euro ECB. So higher interest rates in the euro would typically signal that their currency would become stronger as well. Okay, like the general correlation is the higher your interest rates, the more money that's going to come in and take advantage of your interest rate, right? But what's going on in Europe right now is that they're just screwed. Right? Like they're so you got to remember that over the weekend we had this whole thing where Putin shut the gas off, and there was all sorts of chaos in the commodity markets over in Europe. Well, markets that we can't really see, but there was also many markets in Europe that went haywire. And the Europeans bailed them all out, right? Okay, so you come in, you stabilize the market. Does that mean that everything's hunky-dory? No, because when you distort a market like that, it just means that the pressure comes out somewhere else. And where does it come out in this kind of situation? It comes out of the currency. So any further risks in the Eurozone, things getting really bad and ugly over there as people start freezing to death and so on and so forth, would be negative for the euro. And so that drop below parity for the euro could end up being a really key inflection point, right? So right now, the long-term expectation, and of course we can't really see beyond a day, but the correlations that the markets are suggesting are that the dollar will continue to get stronger and the euro will continue to get weaker as Europe falls into a very, very ugly recession that the United States does not feel as strongly because they have better energy supply, right? But I don't think that well, I guess all of the central banks. So the other thing is you got to think about with the interest rates is that it's relative. So is the euro going to have a higher interest rate than the United States? Well, if Europe falls into recession and the United States doesn't, then that's probably not, right? You could see a situation where the ECB is forced to lower interest rates and then the Federal Reserve keeps them pat, right? I don't know how likely that is, but it's a scenario that could happen. Sure enough, it comes back there a little bit. Now we're at 30.5. Well, in this particular look, so first of all, it seems to me that the volume is kind of sputtered out in the 10-year in ZN. From a long perspective, this doesn't look like a bad risk reward location to go for another long. The spreads aren't really telling us a whole lot today, so I think that although I feel the desire to take a trade here, that I will not. Mester is still speaking, huh? We could see some big moves in interest rates tomorrow, right? Yeah, I don't see where this is. I'm not sure that the scenario that you're laying out for me, Kyle, makes much sense to me. I don't think that that would be enough for me to be placing a bet on it. Being relative also means when the difference widens, shortens, there will be influx or escape of flow. Like the thing that I would be more concerned about with the euro right now is who wants to have their assets in Europe if there's people are going to be freezing to death in the winter, right? Like that's really where this all starts from, right? Is market participants are moving money out of the euro because they anticipate their economy is going to get a lot weaker. So even though we might see recession in the United States as well, and we might see the S&P 500 decline, and who knows, maybe we will see interest rates come back in the United States. Maybe they'll back off soon, like the market was pricing at one point. Maybe they don't. Maybe interest rates go even higher and we get even more inflation and you get hammered even more with treasuries, right? But that would probably still be better than what you might have in Europe, because what they're looking at in Europe is like a crisis, an unprecedented crisis in the modern age. Am I being overly dramatic? Probably. Probably. But that's the trade that they're pricing in. I don't understand why you would want to get in front of that. like any kind of like, when our rates drop, we have dollars fleeing out of here despite the rate swaps still being attractive. Yeah, I don't think that that's going to be as any of those things that you're talking about. I don't think that those are going to be as strong of flows as we need to get our money out of here because Europe's falling apart, right? Just saying, Liz Truss has been formally sworn in as UK's new prime minister. Sure, people are going to have a hard time in the winter. Will it be worse than? Yes, it would be. Dude. The worst case scenario here in this situation, I think, is worse than the lockdowns for economic activity. Because during lockdowns, there was still like essential industries that were kept up, etc., right? Yeah, everybody was at home, but they were just at home comfortable and they got all of this money to spend and stuff. Here we're talking about people are going to be at home. They're going to be freezing their nuts off, right? Like literally people are going to be dying for one thing. And they're going to have to ration energy. Like they're already seeing steel plants in the Euro area shut down because those cost too much power, right? So those are already shutting down, and it's going to turn into what industries do we keep going? Which ones are the most important to give the power to? And how much can we give to them versus the people? And like, that's the sort of thing that they're looking at over there. I'm not saying that I know for sure that that's the way that it's going to go. That's just the worst case scenario that seems to be implied by the way that the market is reacting to this move by Putin over the weekend, right? Good, take us back to the Dixie being a basket of 15 currencies, right? It's exactly that. It would be a huge hit to the euro, like 99555. That's pretty high compared to where they could go if the worst case scenario plays out in the euro. Now, if that is what's actually going to happen, shouldn't the market be like absolutely throwing a complete conniption fit right now? Well, so here's the deal. Number one, they bailed a bunch of people out. So the market doesn't seem to actually be showing us the fundamentals right now. A lot of the signals that we'd normally be getting are basically been distorted. So we can't rely on what the market is showing us to know what's going to happen. Okay. The other thing is that the European Union has been anticipating a move like this. Okay. So it's a bad move, but it's not one that it has caught them completely by surprise. So there has been some planning around it. They have been acquiring energy sources from elsewhere. It is still a very, very negative development, right? So I think that the trade from the developments out of Europe is short the euro, but it's not my specialty, so I'm just gonna kind of watch and see. I see where you're going. I completely agree on energy saving, shutting down entire industry complexes. I hope you're wrong, and how strong it will hit Europe. Yeah, and well, let's not say that I was wrong, because that's not a prediction, right? That I'm just drawing out one possible scenario that's being discussed in the market, right? So I'm just saying, like, the people that are placing speculative bets in the euro short right now, that's why they're doing it. So if I'm going to be taking a contrary trade to that, I really have to think that that's not going to happen, for just to even have a reasonable basis for a trade, right? And what I'm kind of hearing from you is that, like, that sort of thing will kind of happen, but that it will be good for their currency. It's no. because what will happen with the interest rates and the difference between the interest rates is not going to be as significant as the effect on GDP, right? That's what I'm thinking. Most likely scenario, maybe. I admit I'm being optimistic. There you have it. Yeah, okay. So if you don't think that any of that is going to happen and that they're going to make it through the winter just fine, that does that mean lung the euro here? Well, if that's what happens, I think that it kind of suggests that there might be better trades somewhere else, right? Like maybe this, well, yeah, like maybe oil would be a good place to try and play, right? You don't think that it's going to be so bad, and you don't think that there's going to be like a crippling recession, right? Then that would probably be a positive for oil, right? And then since you already have all of the other supply demand dynamics in oil kind of favoring upside, you know, now would be a great time to take a long in oil. I've been stocking oil, like I kind of want to go long, but I keep seeing the way that it's been moving and going like, maybe not, never mind, this doesn't look like a safe trade. The old adage, the most ridiculously hilarious scenario is the one that most likely to happen. We'll see. Well, not sure what to save for today's title, but I have got to get going here. I'm gonna say oil craters because it really was like, what the heck? All right, guys. Tomorrow, stay excellent, team.